Hey everybody, Jeff Jordan again with Coastal Living Realty Group in Corpus Christi, Texas. So congratulations in deciding you want to learn more about being a homeowner. So what do you do now? You've decided that this is a great opportunity for you and your family to become homeowners and hopefully build some wealth for you and your family through real estate, and also maybe some generational wealth that you can pass down after you leave this world. So what do you do now? So the first thing you have to do is you have to figure out how much can I afford? Can I afford $100,000 house or $1 million house? And the way you do that is you're going to choose a lender. Now that's unless you're very blessed and you have a bunch of money in the bank and you can just go out and buy cash, pay cash for a house. So if that's you, then congratulations, you can skip on to step number two. But if you are like the majority of us and you're going to need some help with your purchase, then you're going to look into choosing a lender to help you throughout the process. So the question is, where do you go to find a lender for your mortgage loan? And the question to that is pretty much anywhere. If you think of something as a financial institution, a bank, a credit union, anything like that, they're going to have loan products that cover mortgages. But there's also like national companies like Rocket Mortgage out there, and then there's some smaller outfits that are more local that you might not have ever heard of before that have great products for you to choose from that might be the best choice for you. So how do you choose? Well, you need to call. You need to talk to them about what their terms are, what their rates are. Um, Give them a snapshot of kind of what your financial picture looks like and see if they can help you or not. The biggest difference you're going to find in all these different places is their fees. 30-year fixed, 5-year arm, FHA with 3.5% down. They're going to have all those, but the cost involved, the fees involved, and then also their qualification process for credit scores and debt to income ratio and some of the other factors they use to approve you are going to be different. So if you have a great credit score, you have a fair amount of money in the bank, then you could probably go with anyone, and they'd be happy to have your business. But if you have a little more challenging circumstance where your credit is not perfect, you don't have a ton of money in the bank, then you might want to have to make a few more phone calls. But in general, you're going to find someone that's going to be able to help you with your mortgage. So you say, Jeff, you're a real estate agent. What do you suggest? What's the best company? What should I do? Well, I can't tell you that. Unfortunately, I can't steer you toward one lender versus another, but I will tell you your transaction is a partnership. It's a partnership between the real estate agent, the lender, and yourself. And you have to have an ability to communicate. You have to be able to get each other on the phone, and you have to have someone that is consistently working your account, working your file. I do know that sometimes with very large institutions, there might be a team of people handling a group of accounts or group of files, and the same person might not always work on your file. So they might not know exactly what's happening along the way. It could be hard to get a hold to. Um, may not be very responsive in answering questions. So those are really the factors. Is can you get the same person on the phone? Um, and are they going to be able to respond to you in a timely manner? Because once you get under contract, there's certain timelines and there's certain things that we have to do by a certain date or a number of days. And it's very important to be able to talk to somebody that knows what's happening with your file, but also is very much um, part of the team. And they're focused on helping us get you to the finish line, which is the closing table, getting you into your new home. Okay, now you've decided. You've made your phone calls. You've talked to several different lenders about what their fees are, what their criteria is to approve people in their with their loan products, and so now you're ready to pull the trigger and actually fill out a loan application. So the lender will provide you with a loan application, and then they'll take a very quick look at all the information that you provide on that application, and then they'll make a initial decision whether they think that you can qualify for that loan. And they'll also identify for you how much of a product that you can afford based on the information that you provided to them. So they might look at your application and say, "Congratulations, sir, you are now going to be pre-qualified for a $200,000 home." And they will provide you with a letter, and that letter will be the proof that you're going to give to your real estate agent. And the real estate agent will use that when they negotiate for a home for you to prove that you are a good customer and that you do have the ability to buy a home. Now, it is very important to understand that at this point, you are not guaranteed the loan. This is a pre qualification based on the information that you provided just in writing. This is, again, very quick and dirty, as you might say, but it is not an approval of the loan. That process will take place after you actually find a home and get it under contract. You will be asked to submit numerous documents, W-2s, pay stubs, bank statements, all kinds of different things to show that what you wrote on that application is legitimate, and also it is ongoing, and it can be counted for in the future to help you make the mortgage payments. So, guys, it's great that you got your pre-qualification letter. That gets you moving forward in the process, but it's very important to understand that that does not mean that you are approved. Once you fill out your loan application, do not, I repeat, do not go out and get other types of debt, cars, credit cards, uh, anything that is going to be a recurring payment. Uh, do not do it until the day after you close on your home. Okay, because it is going to be a process where they're going to go through all of your debt and look at it, and that's what they're going to use to determine your worthiness. It's great for that new car, it's great for the new furniture. Wait till the day after you close on your loan, please. As a real estate agent, we see way too many times where we're on track to closing, we're on track to the closing table, and then there was a great Black Friday sale, so I went out and bought some new furniture. And it's 0% interest, 0% interest, but I owe now $4,000 or $3,000 that I didn't owe the day that we started this process, and that is a huge hiccup, and it could derail the whole process. The other thing, guys, is do not, I repeat, do not co-sign for a loan for another person. You say, "Well, Jeff, that's not mine. I'm just helping out my neighbor, my cousin, whatever." But if you are a guarantor or a co-signer on a loan for someone else, then that third party, that person that you co-sign for, is going to have to be involved in this process to show that they are making the payments as intended, that you are not helping them out making the payments. And I'm going to tell you from firsthand experience, that's a pain. Having someone who doesn't really have any skin in the game toward the house, getting them to submit all the paperwork. So if you have any intention of buying a home, do not co-sign for someone that's not going to be a party to the loan already. It's one thing if it's a spouse, but if it's a third party, a friend, a neighbor, it's just someone that you care about, that you're trying to help them out, it's going to be a problem when you go to close on your loan.